It's about that time of day again here, boys and girls. Welcome back, welcome back. JJ here, SchoolOfTrade.com, SidewaysMarkets.com with your last nightly newsletter of the year 2014. That's right, tonight is December 17th, 2014, broadcasting live from our corporate headquarters here on a very lovely winter day here in Los Angeles, California. This will be our final newsletter of the year. Boy, what a year we had. What a year we had. Boy, I can't sit and reminisce very much though. We gotta make some sense of what happened here on this wacky Wednesday. We had FOMC, we had wacky Wednesday today, we had inventory day on crude. Gold goes lower, but we're still stuck around that 1200. How about that crude today? Boy, I'll tell you, crude's fun right now. There's some fun going on every day on crude right now. We nailed the target at the lows, right? Made it all the way to the low of the range, like we talked about last night. And then, boy, this morning, there was nothing but bulls, right? I sold once, right? I sold once this morning early, and then it was nothing but buying the rest of the morning. Buyers stepped in real strong. I'll give you guys my opinion of that in a moment. And the Russell, boy, the Russell caught a bid today too, right? FOMC, like we talked about yesterday, such a variable today of what we were expecting. So we're going to make some sense out of this in a moment. Before we jump into our charts and get ready for tomorrow, I want to make sure you guys remember to make sure you're watching this video on our trading blog here at SidewaysMarkets.com. If you're not watching the video on our trading blog right now, if you're watching it on our YouTube page, there's a link right below the video, and that will take you over to our blog page. There are 3 reasons why you got to get over here to our blog. First of all, right below the video tonight, you can download all the charts that I'm reviewing this evening. Upper left-hand corner, second thing here, I have a special free pass for you guys. I would love to send you a free pass to come out and join us in our live trade room. If you're not a member of School of Trade and you'd like to see what it feels like to be in our live trade room, I'd love to give you a free pass to come test drive our live trade room. And of course, the third thing, yep, there was 3 reasons. We have a nightly newsletter mailing list. Lower left-hand corner there, I've got a spot for your name and your email address. Just give me your name and your email address, and I'll send you an email every evening when we send out our nightly newsletter. That way you never have to miss another report again. So 3 things here this evening. First of all, download all of these charts, and that way you've got them ready for your own trading tomorrow. Second thing, grab your free pass. And third, join our nightly newsletter mailing list. Now guys, if you grab the free pass or if you register for the mailing list, just be aware I'm going to send you a verification email to make sure I have the correct email address and also to make sure you are not a robot. All right, guys, let's get ready to rock here. Seatbelts fastened? Yeah, make sure you stretch here for this one. This was a wild one today. Today was a wild one, and they don't call it Wacky Wednesday for nothing. Remember, today was Wacky Wednesday of not just OPEX, of quadruple witching, right? Every 3 months, right? 4 times a year, March, June, September, and December, right? So here we are, 3rd week of December, last trading week of the year for most professionals, right? Most professionals are already gassing up the private jet right now, right? Maybe that's why crude spiked higher today. But probably not. Let's talk about the Russell. First of all, here, starting with this bullish mighty Russell. Now, again, you gotta remember, today we had to deal with FOMC, and all bets are off, right, for FOMC. Now, FOMC is one of 2 news events. Okay, the other one is non-farm payrolls. FOMC is one of 2 news events that will have long-lasting impacts in the market. So normally, right, you probably can read what I'm going to say ahead of time, right? You probably finish my sentence right now. You're probably thinking I'm going to say anyone can put together a one-day rally, right? Isn't that what I always say? That's the way that I always see it. Anybody, any market at any point in time can put together a one-day rally. And that's what we got today. But guys, this ain't no CPI number. This is no jobless claims, right? This is FOMC. Right now, you get all the bean counters, all the analysts are locked in their cages at these major asset management companies, and they're digging through the report right now, slicing and dicing, putting together a plan for the rest of the year and, of course, now into 2015. I'm not going to get into too much about what the FOMC said, but basically we are well aware now that interest rates are most likely going to start going up sometime in 2015, right? We don't know exactly when, but it is a unanimous vote, right? The opinions, I guess, right, of the Fed governors. Now, Janet Yellen still will not confirm for us, like a good Fed president she is, right? So we know we're not going to get anything substantial from them right now. But we do know, though, that people are going to be starting to gear up for 2015. And so everything I talk about today, you got to remember, there's a big question mark going into tomorrow, right? We know it's coming into the end of the year. People do crazy things towards the end of the year. And because we just got the last FOMC announcement, we're going into options expiration, quadruple witching on Friday. Again, I'm going to give you my best shot right now. But again, tomorrow morning, like we always do, we're going to wake up tomorrow morning and we're going to see what's happened here overnight, right? Remember, Asia and London have not had time to react to FOMC yet. Okay, remember, you wake up in China tomorrow morning or in a few hours, okay, and you're reading the newspaper about the FOMC report. Okay, so we still have another, let's say, 1/3 of the reaction still left to go. Okay, makes sense? So with that said, okay, be aware, we do have a one-day nice big rally, right? The Russell traders, all the E-minis today, pretty much everything was in the green except for crude for most of the day, and then crude jumped at the end of the day. So bullish Russell, but you'll notice we go right back up to the highs of this channel, right? We're back inside that range again. Remember this range that we made all that money with, right? Yeah. I'm perfectly fine being inside this range, but the big question right now is, are we buyers or are we sellers right now? That's the big variable right now, and hopefully we can make some sense out of this. The first thing I see is we're right back up here, and this trend line coming overhead, so we know we've got some resistance here. And if I had to guess right now, I'd say that resistance probably not going to hold here. I would say that 77.5 to 83.8, right? That would be most likely where we get that if we get a collapse back off that high. So what I'm going to be doing here overnight, again, is I'm going to be watching to see what happens in this area here. If we just torch right through this, then we know what's going on, right? We know we're bullisher than we thought we might be. Okay, again, everything, all bets are off after FOMC right now, right? That's why I said yesterday that it's really kind of a variable here. So we know we're looking for a sell off the high of the channel. If we happen to just roll over right now, you can definitely get to selling short. I don't think they're going to make it that easy on us. I would imagine they run it up to that 77.5, 83.8 before giving us a chance to get short on this. And again, I'm going to give you some options here right now to buy all the way up. But what I want you to promise me though is if you start buying this, do not buy into that 77.5. Do not buy into that high at 90.9. All right, that's the only caveat if you want to be a buyer right now in the Russell. Okay, I agree. We look very bullish right now in the Russell. But when you look at the big picture, though, you take a step back, you can see we went all the way back to the highs, right? If this was any other news event, besides non-farms and FOMC, I'd be saying definitely sell these highs, right? But again, we still have Asia and London to react tomorrow to the FOMC report. Now, here's what I'm talking about for that Russell, right? Here's what I'm talking about. Very, very bullish, okay? It's almost impossible to think about selling when you look at this chart. So it's very bullish in the short term. We know why we're thinking about being a seller up at those highs, right, off that 32 anchor. So right now, the only thing I can tell you is buy these pullbacks, but just be careful, right, because you got that 77 is going to be right in there, right? There's that 77 right there. So you're going to be able to most likely get up top here, but then you got to stop buying and be ready for the sell. And remember, at any time tomorrow, if this thing just torches right through everything, then we know what's going on, right? We know the markets are reacting positively to what they didn't say, right, today at 2 o'clock. Okay, so don't forget to watch the resistance levels from that 32 anchor chart for targets, right? But as we pull back here, you got 64.8, 60.9, 59.8. I would love to get a buy somewhere around here, right? You got two nice reversal lines right there, right? I'd love to get a buy down around that 1156.6. I don't think it's going to happen tomorrow, but hey, I'd love to get a buy down there at 56.6. That'd be a nice little tasty buy opportunity there. And then we look at the price action chart, and I'll tell you right now, if I started with this chart, right, if I opened up the video tonight with this chart, you'd be saying, dude, selling? Are you crazy? Right? I mean, you can see what was really incredible here is that these buyers just shrugged off that overshoot, right? Overshoots like that are just money in the bank, right? Usually we get a nice sell off that and then a rebound later on, right? Like we saw today on Crude. That's exactly what happened on Crude today, and we made a killing off of it in the room today. So very, very confident here in these buyers, right? Yeah, that's a big confidence booster. Now, given, you look at the kind of the way the thing went here, right? So we're going higher, we bust through the top of that channel, and then FOMC is most likely why we didn't get that bigger correction, right? If you remember of mine, you're saying, dude, that's an overshoot. Shouldn't we have gone lower before? No, well, we got interrupted by the FOMC. So we are still inside this bullish channel as far as I'm concerned. And we know that this type of channel, I mean, if you're looking at some measured moves here, we are way up there, right? We are in nosebleed territory here right now as far as, markets aren't going to keep going higher or lower forever, right? They're going to have some profit taking. They're going to have some fear and greed, right? People will start overthinking it. So right now, ultimately, your best options are to look for buying opportunities at the lows of the channel. Okay, but I would be suspicious of that. I would definitely be suspicious trying to buy the low of this channel. I'd be more inclined to look for a second here, right, off of the 1159.1 area, right? I would definitely be looking to be a buyer there. If we happen to get all the way down to 48.8, right, we can buy that as well. But I think right now, though, what you're looking for is I want to see a break of this channel, right? I want to see a break of this channel, shake this thing up a little bit, right, and then we can start buying this baby again. All right, guys? Now, the one thing that you want to be aware of here right now, if you look overhead, right, kind of squeeze this thing together. Okay, here's my prior week high up there at 84.1. Remember, that was the big range all the way up top, right? Then you get the prior week open, 78.4. So don't be surprised if we run up, right, up to these highs here. If we don't pull back, be very, very careful being a buyer if we get all the way up here. If we get all the way up to these dashed red and blue lines here, again, I want to see us pull back so I can buy it and get up to these targets overhead. If we get all the way up here, though, then we're ripe now for a collapse right back down in. Again, tomorrow's going to be an interesting day. We're going to definitely be looking closely at this Russell and see what it looks like at the opening bell. Okay, that we can react more to what we see from the FOMC. Moving forward here, from the mighty mini Russell to that funny yellow metal they call gold futures. Well, here we are, back inside the range. We never got a chance to get short again today, right? Remember we talked about last night. We were hoping we'd get a chance to bounce up and then sell that sucker back down to get the FOMC announcement back to 1200, but we never got the chance. It pretty much stayed sideways here all day today. We made a run at the lows after the FOMC announcement, but I'm going to show you some proof that those sellers were nowhere to be found, and we'll probably end up back at 1200 tomorrow morning sometime. As you can see, this is a really tough area to be in. Okay, in all reality, this little area here should be colored a different color. This really should be like a yellow color. It really isn't a buy zone. You'll notice we're right in the middle of this range, right? You got range highs, you got range lows, and we are just right in the middle of that range right now. So I really don't like recommending anything to be trading around here because it's very, very slippery, sloppy, right? What I'd rather see is us go up and then back down, go down and then back up, right? That's what I'm looking for right now. That's where the easy money is going to be here on the gold. So right now, I'm telling you guys, the rest of this week here, it could be a little bit challenging here on gold long term, right? Right now, I would definitely be waiting on gold, sell these areas overhead, buy these areas down below, and where's our target? 1200, right? Until we see a disconnect, until we see markets actually make a higher high and then keep going, right now we're seeing a higher high, but then it's failing, right? Like we saw right here. right? Higher high, whoa, nope, right back in, right? That's what we've been getting lately. So until we get a big disconnect from that 1200, we have to still keep riding that pony, right? Keep riding that pony. Now, here's a very useful chart. Okay, first of all, excuse the gross price action. I mean, this is like, right here, guys, this is as bad as it's going to get. This is as bad as you're probably ever going to see a chart. I mean, it's ugly. This is not fun to look at. And it wasn't fun to even try to trade this morning. Gold, remember, if there's one market that is highly, highly affected by the FOMC, right, it's the dollar. And the dollar is the dog, right, that wags the tail. That is what? That is gold, right? So we know that the dollar is highly affected by the FOMC because they're talking about monetary policy. And with that comes the side effect, right, of having euro impact, having gold impact. So everybody pretty much just gets the hell out of the way, right, when we have FOMC. So bottom line, we know we have a $1,200 an ounce target on here. Gold reacted bearishly to this news, which is really no surprise. When you look at what happened in crude, you look at what happened in the E-minis, right? The equities got a big run today. Not quite sure why, don't really care why, right? There wasn't much in the FOMC announcement that would have had people being so bullish. It must have been something else that was dug in there. There was rumors from Obama about Cuba today. It doesn't matter. But the bottom line is, because the equities were bullish today, gold will definitely be bearish. The real question is right now is, are these bears for real? Are they for real? And right now, I don't think they are. I think the volume down bottom here tells a story. You'll notice here, if I line up the low with the low, right? I'm no Bob Ross here, but I can draw myself a little line there, right? So we get a lower low in price and a lower low in the volume. It doesn't make any sense, right? It doesn't confirm the sell side. So we're looking at this going, okay, we pushed down after FOMC. We definitely know why, right? Everything else was bullish. Gold, by definition, is going to be a negative correlation to that. And so we can assume now, right, sellers are trying. I can see sellers have failed. And because those sellers are not confirming right now, what I'd be looking for is I'd be looking for some nibbles here to the sell side. And when you see those sellers fail, that's going to be your cue to go to 1200. Right, so tough to predict the future on this because, again, we still have Asia and London to react to FOMC tomorrow morning. But if I had to guess right now, I would say we go up. Right, you're going to get some sellers there. I mean, you're going to get some sellers at that zone. Right, they'll push it down a little bit. Right, but then look for that big wick. Right, look for that big wick, that green bodied candle. Right, just screaming at you. The sellers tried and failed, and then we're going to be shooting for that 1200. Right, and guys, I 1200 may continue to be the magnet for the rest of the year. It really may, until something changes. Right, until we get some fundamental changes out there. I don't see any reason why it won't. All right, guys. Last but not least, here on the gold, here's another. I mean, this chart is just ugly. This like I said, this is about as bad as you're going to get it, and it's because it's gold on FOMC day. Right, so kids, stay away from gold on FOMC day. Now you know why. Right. Remember, think dollar, think gold and euro, right, et cetera, et cetera. So basically, we just kind of piggybacked onto this low from yesterday, right? There's your range low, there's your range high. And again, here's a nice example of a bear trap, right? The sellers try. They're nowhere to be found down here, and whoops-a-daisy, right? We go back up. And so we're definitely looking good here for a buy up to that 1200. Again, what I would look for is I look for sellers to try to go lower one more time, right? That's really the easy money. You see those sellers try to go lower one more time, you get a nice green candle, right? Big wick on it, right? Closing at the highs. Yeah, you got this thing going right back to that 1200. All right. If we happen to overshoot 1200, you get a fade, right? You get a fade. Right? So we'll definitely be looking for sells here at these levels overhead. And again, right, I won't be here with you guys the rest of the year on this, so keep using that 1200, right, as your big price magnet for your trades. And then last but not least, my boy Crude. Don't forget, this is the 215 contract. Now, we did trade the 115 contract today. Okay, I thought for sure we'd be having rollover today. That would have been too easy, right? FOMC, inventory day, wacky Wednesday, rollover day, right? That quadruple whammy we talked about last night. So don't forget, this chart is the 215 contract. So if you're wondering why yours don't look the same anymore, I've rolled over here to the 215. We did trade the 115 today. We did just fine. We actually had a great day today on it. Okay, so now we've gone to the 215. Right? It may be balanced tomorrow, but it should be rolled over. And again, another day where we saw at 9 o'clock the bulls take over. And then sure enough, by the end of the day, we're selling it right back down in. This is the beautiful part about being a trader right now, is that we are able to buy it on the way up, and then up at the range highs, we sell it all the way back down. Now, if you remember from last night's newsletter, my exact words were, if I had to guess, I would guess we stick inside of that range, right? I was thinking it would stay a little bit lower than that at the highs, but that was the range that we had speculated yesterday. So we're definitely going to continue to use that range. There's no reason to think that range won't continue to be in play here right now, okay? So we're looking at sells at the overhead red areas, right? The sell zones overhead. Take our profit off at the targets of the lows. Now, boy, if you bought the target that we gave you last night, right? Remember this from last night? This little area down here. We opened the room this morning at 8, right? We sold short on the way down, and then this thing just took off, and we bought it all the way back up. So it was a great session in the room this morning on it, right? So we'll probably get down there again, right? No reason that we won't. So we go lower, right? Retrace into that sell zone, right? Down to that target, 55. Now, 55.50, 55 even has been a very sticky level, hasn't it? Right? It's been a real sticky area here, this 55 area. We spent quite a bit of time dancing around it today, right, and yesterday. So I would definitely lean on the side of $55 a barrel makes for a great target on the way back down. I don't think they're going to give it to us straight line down, so definitely be looking for a sell up here at 57.67, 58.58, right? 59.22. And if we happen to make a run for it, right, you got your 62.25 up top there, right, for a sell as well. All right, guys? So stick inside this trading range. I am still in a bearish trend right now, so let's not get too crazy. Don't overthink this. And again, come out and see me tomorrow. We'll be trading the 215 contract in the room tomorrow morning, and we'll be using this range, right, as our guide. Moving forward here now, here's another chart. It's a lot of the same stuff. There's not a lot more I can give you guys right now on this crude chart. You know, that's what happens when you have this just very well-defined, very dramatic trading range here. You can just kind of see where we are, you know. And when you look at this, the first thing I think of is yuck, I'm right in the middle, right? We are right in the middle of that range. What do we know about the middle of the range? Well, Mama says don't fiddle with the middle, right? So we know better than to mess with that middle. So this is why, once again, I'm going to stay patient. Wait for price to go up, right? Sell it back down, go up, sell it back down, right? Those are easy areas to look for a short. Even if we go all the way back to the high, right, we'll try again. And then the only real concern we have is if we do head to the downside here without retracing, you'll most likely get a buy right here, but just do it conservatively. Just be careful being a buyer for obvious reasons because of this extremely bearish trend. But, you know, so far we've had some decent moves. And if you've noticed, the buys have been fast, right? I mean, it's been very illiquid. It's been very fast. This move today went $2 in about 2 minutes. I mean, literally, it moves so fast, and we actually bought it, right? We were buyers down here by fading the news, right? The news came out at 10:30, pushed the price down, right? We were buyers here to fade that news, and this thing just took off to the upside. So great day of trading today, right? If you took my advice and you tried to fade that news today, you made a killing off that thing. So we got the range. We're going to stay to the short side here on crude. Not much else I can say besides come out and see me tomorrow, right? And we'll walk you through it in real time. Okay, here we go now. Price action chart. I love this market. How do you not love this market right now, right? You start in a trading range. We got a nice bear trap down at the bottom, right? That was when we started buying it, right? We bought there at the, yep, I was going to say, we bought here, I bought here, and we bought right there this morning, right? Ran all the way up. I was working with clients here during the FOMC, and look at it, comes all the way back down. So we can see we go right back to that trading range, right? Go right back to that trading range. We run all the way up, real panic buyers here, right? Consolidate for a little bit, and then a nice channel right back down to that range. So this channel tells me the sellers took back control at the end of the day today. Look for the sellers now, and this candlestick is basically, now when I did this chart, that candle was not there. So that candlestick right now is basically doing exactly what we'd expect. It's bouncing off the highs of that range, and hopefully we get it to that resistance area, 57.65, and we'll sell it right back down in. We got two areas to sell, and then if we do roll over here and go back into that range, think breakout, right? Think breakout. And remember, the trend is down. Okay, so members of mine, come out and see me tomorrow. We'll walk through the price action as we see it, just like we do every day. We had a fantastic day today. I hope you guys did too. We've had a fantastic week. We have had the best year of our performance in my career. I gotta thank Vladimir Putin, right? I gotta thank Mario Draghi. I gotta thank my girl Janet Yellen, and I want to thank all of you guys, right? You guys made it possible. We continue to see our students succeed more and more every day. Boy, I could list off a dozen or so clients of ours right in our trade room right now that are absolutely killing it right now. So great work this year. And boy, I'll tell you, it's a little bittersweet. I really love my job. I really love this newsletter. I really enjoy the markets. I enjoy trading. But guys, this is the time of year when you've got more important things to do. Spend that time with family and friends. I will be doing goal sessions with our students this week. So if you're a member of School of Trade, come in and see us in the trade room. On Friday, we'll be doing goal setting, getting ready for 2015, because in my world, that's what the last 2 weeks of the year are all about. The last 2 weeks of the year are all about licking those wounds, resting up, healing all those battle scars from this year, right? We're all beat up, have been working long hours, been kicking tail all year this year. So it's time to rest up, refocus, okay? Read a couple of those books you've been putting off all year, right? Go see grandma, spend some time with people that matter the most to you, and set some good goals, right? Set some monthly, some quarterly, some yearly goals for 2015. I'm going to be doing that with all of our students on Thursday, Friday this week, and I hope you will do the same. And if I don't see you in our trade room tomorrow, right? If I don't see you guys in our trade room, you guys make sure you have a great holiday, right? Have a Merry Christmas, have a Happy Hanukkah, right? Have a Festivus for the rest of us, right? I'm having fun with you guys. But all kidding aside, though, have yourselves a very happy holiday, right? From my family to yours, be safe, be well, and be ready for another incredible year. We got 2015, baby, coming right around the corner. My name is Joseph James. I want to thank you so much for being a part of our newsletter. Thank you for making 2014 a record-breaking year for all of us. And don't forget, we get a free trial, 3 levels of membership, and someone standing by here 24/7 to help you guys out. I will see you all in the future. Next newsletter will be January 5th at 8 p.m. Eastern Time. I will be here in Los Angeles here for the entire holiday. I'll be at my desk for quite a bit of it, right, outside of the time with family, getting ready for 2015. Keep in touch. Don't be a stranger. And again, stay safe out there. Merry Christmas, Happy Hanukkah, and a very happy New Year. All right, guys. Joseph James here, signing off here for 2014. You guys have a great holiday. Adios, amigos. Bye-bye for now.